So it is currently the 23rd of May 2026, and I'm gonna be analyzing gold. I know it's been a while since I did this. I've just been very preoccupied with a lot of things. So without further ado, let's up into it. So first of all, I'm gonna go ahead and take away all this annotations. So remove all objects. Yeah. So this is the 4 hour time frame. Sorry. Um, yeah. This is currently the forward time frame, and so let's assume that you come into the market, and this is the first thing that you say. So, what's the first thing that you do? As you can see, this is a level of buys at this level, which is also a swing low. Okay, so when you're trading RCC, what you want to focus on the most is your swing highs and your swing lows. So this is a swing low, okay, and we have the swing high over here. Boom. So we do see that price gave us an indication to the upside. According to ICC, this is a correction, and we were supposed to have another continuation from here to the upside. But what did the price do? Price started to create lower highs and lower lows, and then price broke this swing low and gave us an indication. Okay, so after we get this indication, we have this correction, which is lower than this previous high, lower high, and then price got to this level. Usually when price gets to this level, we were thought that we're supposed to enter, but to wait for extra confirmation, you will wait for another lower high. Then once price get back here, then you can know that it's going bearish. Then you can sell all the way to this level, then to the next level of bars, which is below. And I'm going to be showing you all that. So, let us zoom in. We have this swing guy over here. Now, there is a pretty important thing that I want you guys to know, okay? So, when price is between a swing high and a swing low, it's called a no trade zone. So you don't want to trade that zone. But what you want to do is you want to wait for price to break the swing high, give you an indication, a correction, and continue to the upside. Or, on the other hand, just as we see here, break the swing low, give us a correction, and then sell to this low. Just the same RCC method, okay? So that's what you want to do. So when price is in between a swing high and a swing low, you don't trade. It's called a no trade zone, okay? And we see here that if you want to follow market structure, we see that price created a lower high, indication, correction, and then lower low, lower high, lower low, lower high, lower low. And then we're looking to sell from this level. So what is our entry gonna look like? Let's just go to 1 hour to see our price more clearly. So we're gonna go lower to the 1 hour time frame. And what do we see? We start to mark our zones. The reason we're marking these zones is so that we can know where we're gonna put our stop loss, okay? So we have this lower high, lower high. Price is literally respecting structure. Lower high. Oh shit, my bad. Lower high. Price is respecting structure, creating low highs and lower lows. That's how you know that this is still bearish. Okay? So your entry is gonna be at this level right here. We want to wait for price to break below this level, and your stop loss could be at this level because, or you could, to be safer, you could put it over here. But I'm gonna put mine over here. Reasons being that if price breaks this level, then we know that price is turned bullish. How do we know? Look, think about it. When price got over here, created a lower low, a lower high, it was lower than this previous lower high. Price respected structure. When we got to this level, it was lower than this lower high. So the next lower high is going to be lower than this lower high too. Okay? So that's that about that. So where is our take profit going to be? Our TP is going to be at this level first. Okay? But there is a mistake people make. As soon as they go to the 15 minutes time frame like you're supposed to do, as soon as they go to the 15 minutes time frame to get the entry and the stop loss, they want to mark the take profit on the lower time frame. You don't want to do that. What you want to do is you want to mark your stop loss on the lower time frame, but you want to go back to the higher time frame to get your TP zone. So our first level of TP is the next level of buys, which is at this level. So that's giving us a 1.62 RR, okay? But then we know that if this is still going to continue bearish, then price is going to look to hunt the next level of buys. So what you want to do is you want to zoom out and then look for the next level of buys. So as we can see over here, we have this level of buyers, okay? Boom. And again, if we look closely, we have another level of buyers at this level. And then overall, we have this level of buyers at this level. Boom. So I usually advise my students that you don't want to use a take profit zone. You don't want to set your take profit zone. You can set your stop loss, but you don't want to set your take profit zone. And I'm going to explain why. Okay? So first of all, I'm going to move this TP all the way here because of what I want to explain right now. Okay? So the reason you don't want to use your TP zone, but you want to set your stop loss is because think about it. If price breaks this level and hits your TP, right? And it breaks this level lower, then you know that this is now your new indication. Is going to correct and continue to this next level of buys. Okay? And then once it breaks this level, it's going to look to correct again, then continue all the way to this level, and it may even go further down and break this level by indicating correcting and continue to the downside, or just reverse it completely. But if it wants to reverse, it's going to look to change corrector, come back into this level, then you want to buy from this level all the way to the next level of buys. So that's that about that. That's simply how you trade RCC. And that's going to give you about 1 to 6 RR. And I'm sure that's not the end. If you continue to hold, price is going to give you about 1 to 12.9, 1 to 13 literally. 1 to 13 RR. Just in one trade. So that's why you don't want to set your TP zone, but you want to set your stop loss. Because you don't know that price may continue to push price lower. So what I want to do, if I were you, is to set my alert, okay? Instead of putting your TP, you're going to set your alert. price crossing down, save. So each time the price gets to that level, you get a trigger, and then you know the price is at that level, and you want to monitor the market to see what's going on, to see if you want to like take your profit or you want to continue holding. So you want to like set your alert at your TP zones. You want to set your alert at your TP zones and just continue holding. So with all that being said, this is my analysis for Monday, the 25th of June. And let's just see how it goes, guys. Let's see how it goes. So with all this being said, I hope you guys have a profitable week and a blessed weekend. So God bless you all. Deuces.